Now we'll be going through what I consider to be the time frame alignment. Okay, time frame alignment is pretty important, very important in my opinion, and I actually believe it's one of I believe time is the most important thing in trading. Okay, I believe time is the most important thing that you need to consider as well the price action and you knowing your things, but you need to know them in a certain time. Okay, because they will repeat and they will look very similar at certain times. In certain different times it might look different and it might not repeat as it repeats in certain times. Okay, why? Because if we're thinking of a market, many of the people that enter the market might enter at a similar time, leave the market at a similar time, though making the market subject to those people's changes. Okay, so if we know market is very volatile at a certain time, most people will go to that time, making patterns, well, repeat in most cases, and having these predictable in long run patterns. Okay, basically time, I only use 4 time frames. I do not care about anything else. 4 time frames, that's it. Okay, with those 4 time frames I make most, if not all, of my decisions. Okay, basically with 2 of those, well, actually 3 of those, I make all of my decisions, and one of those I do it for bias. Okay, for a bias for the day. Okay, so basically how I use my time frame is I go for my daily to see what is going on. Okay, if I see price just collapsing and then I see this candle, for example, I wake up that day, I open the market, and then I see this candle the next day, and for example I see market going here. Okay, as you can see, market went there in the London session. Okay, perfect. First, it took the previous day high, which means we're likely taking liquidity. Then we have, for example, this big candle, which is a candle in the 1 hour, closing below the previous 1 hour low and taking the previous 1 hour high. Okay, why do I say this? Because previous hours, previous days, high and lows, even in the 5 minute, okay, much less likely to be respected most of the times. However, in the 5 minute it also happens. In the 1 minute, in my opinion, it doesn't really matter because it can happen whatever happens. I do not take into consideration this that I'm going to say in the 1 minute, but in the 1 hour and in the daily, many times it happens. Okay, this is why I take into consideration 1 hour closes. I wait for those 1 hour closes. I wait for those 5 minute closes because for me it is extremely important to see how price reacts to the previous candles low and highs at a certain time. Okay, so if we close below and we took the previous hour high, what I'm expecting is continuation. Okay, I'm expecting continuation. I will show that. Okay, if I see a candle closing below the previous 1 hour low, I am expecting continuation because it was unable to close above it. If on the other side it opens, sorry, closes above the previous 1 hour low, I'm not expecting anything. Okay, if I'm bearish, I'm not in the trade. I'm expecting nothing. I'm not entering that trade even if in the 5 and in the 1 minute it looks bullish. I expect nothing. I'm not entering into the trade. I'm not longing. I'm not shorting. I'm out. Okay, I'm out. I do not care if it goes down again. I'm out of the market. Okay, in the long run it will save you most of the times, okay? Most of the times it will save you. As you can see here, for example, we closed below the previous hour low, then we go up in that candle. That was trade from yesterday. We close below, then what we do, we open and we go up to where? To a premium. Okay, we go to a premium. After going to that premium, we go down. Why? Because we closed below. So what do we expect? We expect that low to be greater. But that what happens here? We have 1, 2, 3 attempts of going lower. No closure. Actually, we're attempting again here, touching it 5 times. No close. So if you haven't taken all of your profits, even if you were expecting these lows, in my opinion, it's a bad trade, because price is showing you I do not want to go lower. I closed above it 3 times in 15 minutes. So if we think about the 5 minute and we think about the 1 hour as the same, okay, and especially here in this one, because in this one it took the previous 5 hour low and it closed above. So we closed above a 1 hour low in the 5 minute, and we closed above in the 5 minute of another 5 minute low. Okay, so we're having this time frame alignment. Okay, look in the 5 minute how it works the same. Look, we take the high, we go lower. We take the low, we go higher. We take the high, both the low, in the scissor candle. We do not know where it's going. We take the low, we go higher. We closed above. Okay, where do we expect to go next? The high, high, high. We take the high, we take the low. Okay, we take the high and the low. Well, I do not know if it did. Okay, it did. Here, it closed, and we didn't take the low or the high. But here we can see that we took the high. We close below, we go down, and look how in the 5 minute it even does the same thing. I'm telling you, it's very important to take this into consideration in your trading. It will save you plenty of times. It's not going to always be the same. You need to take market structure, time. When I mean time, I mean closures, okay? You need to take time, market structure, premium and discount, other things into consideration. It will take you a lot of time. It will take you years. However, if you start with the right things, in those years you will be good. Okay? Okay? Taking into consideration, do not go the easy way, just wanting to do one thing and not learning about all the things. Okay? You do not need to learn all the things, but if you're going to learn one thing, learn it correctly. I'm not telling you to do everything and to, okay, if it take the low, I'm going to short. If it did this, I'm going to long. No. I'm not saying that. I'm saying in your strategy, if you see these things, take into consideration what happens if you do not short, if it closes above the 1 hour low. Am I saving me from losses? Or I've seen that even if it closes above, it's not saving me from losses. In my strategy, it does save me from losses. Okay? I do not care if we go for this low. We haven't. I do not care absolutely. In my opinion, in my study, it's likelier to go for this high than to go for this low. It can go for the low, absolutely it can. Okay, absolutely. As you can see here, it happened. We went high, we didn't take this, we never went for the high, and we went lower. Okay, but we have to take here into consideration that the time period in which the trade was the trading was done, there's no volatility. Okay, here there is, so there's likelihood of higher before lower. That's time frame alignment. I use these 3 time frames, and in the 1 minute, as I already explained in the previous lessons, I use it as my fractal. Okay, however, I use the 1 hour and the 5 minute as my diving strategy, and I'll use the 1 minute just to look into, am I looking at a fractal? Am I maybe losing an opportunity of entry to the market because I see, for example, this swing high. Let's take into consideration maybe, let's say, this swing high to this swing low. Okay, is this market structure? Then we're bullish, then we're going higher. No, okay, no. In that certain criteria, no. So that's why I use my 1 minute, and that's why I recommend you to use 3 time frames. Okay, daily I use it. I'm saying this as a scalper and as a day trader. If you use, I'll say right now the other time frames. Is you use for swing trading, I'll show you, but for the daily, I only use it as the same as I use my 1 hour and where I'm expecting the price to go that day. Okay, so if for example I'm inside a trade and I want to take profits at a certain place, let's say this low, I'll mark my low, then I'll go to my daily and I'll see how my price respects. And because I'm a scalper and day trader, I'm not just going to see price showing me unwillingness to go here and hold my trade all over here. Even if I enter the trade, for example, here, I'm not just going to say, okay, I'm going to hold it. I do not care whatever 5 minute and 1 minute do. I'll just wish the best. No, if I see unwillingness as a scalper and day trader, I'll just cut the trade. Okay, even if I end up getting here, because that's the daily bias. Okay, that's in the daily, that's what it's like to deliver, because look, we closed below. Then we went to the low and we touched it and rejected. So is there a high chance of us going here? Of course, there is a high chance. But in my time frame, okay, in my time frame, it's showing me, okay, we're likely to go here in the higher time frame, but we're not likely to go here right now. We could perfectly manipulate if we're going lower into here. Okay, we could perfectly and go lower, and I'm just going to take the loss. No, but if I'm a swing trader, for example, a swing trader could enter, well, in this case, a swing trader, I wouldn't have even an entry here, but for example, a swing trader uses the weekly, which this is your structure, which we broke, okay? Here we had another structure, broke it, we went into the premium, okay? We're actually inside of this structure. We haven't even left the structure. We're bearish, okay? We're bearish, and we went to a premium again, rejected the premium in the weekly, okay? And once we rejected the premium in the daily, which will be older of your time frame alignment, what is the daily doing? Because remember, in the weekly, if we're bearish, sorry, there will be a point in where daily will turn bullish, okay? And put very close attention to what I'm going to say, because if nobody tells you this, you're never going to learn it until years of experience, as happened to myself. When the weekly turns bearish, we just keep going down? Could be. But if you're a swing trader, you're looking at the daily, weekly, and 4 hour, okay? Or even the 1 hour. 1 hour, you can also use it, okay? You can use the 1 hour as a swing trader, but the 4 hour is the most common. So here we would see our daily turn bullish. And this will be our structure in the weekly. So where is our premium? Where? Here in this section, from the 50 to the 70. This is our premium, okay? So what are we looking for? If we're thinking, okay, remember, this is time frame alignment and very important. If we're thinking, okay, daily turn bullish, I want a discount of this daily range, which I already showed you in previous videos. It was around here, okay, around there, maybe a bit lower, I do not care, okay, it's just a demonstration. And here is my premium. I target these liquidity points, which eventually get tapped. I could target all of these highs, which eventually did get tapped. It's also 70, so both confluence, and this will be a huge trade, okay? 5, okay, it took a couple of months, okay? But you're a swing trader, so if you're a swing trader, that's what you're going to be holding for weeks and months, okay? So it took about 4 months, about 3-4 months, right? And there's your trade done. If you do 2-3 of these trades per year, and let's say you win an average of 4 risk reward, and you risk about 1% of your total equity, you could be doing, okay, if you do it, as I've already mentioned, 3-4, okay, you could be doing about 10%, 12% of your money in a year just trading swing trade. Okay, it's pretty good. As a day trader and a scalper, you might do more, you might do less, okay, because a day trader and scalper will take more trades, will take more losses, okay, will demand more time. So as a day trader and as a scalper, you will have to, of course, adapt to the losses, the commissions that are much bigger because your stop loss is much smaller, and the time demanding and everything. But you might end up having much more than a 12% a year, okay? I've done myself 8% a month, which of course is really good in my opinion. It's very, very good, but I do not always do 8% a month. In reality, you do not always do it. But if you can do 8% a month, and for example, you do it 2-3 times, well, you can stop the whole year. Okay, you can do 20% a year. You're done. You're done trading. You're done this year, and you can focus. But if you also want to continue, you can end up doing a lot more. Okay, you can end up doing 40-50% a year. Okay, it's a reality. But going back to the alignment, there we have our trade. Now, what are we wanting to see in the weekly premium? What do we want to see? We want to see a market structure break indicating that the daily is about to turn bearish again. Where do we have it? Well, we have a manipulation here out of range, manipulation up here of the range, and you think may even will stop you out, and you may have taken both losses. Okay, you might, but then you have this market structure break, which is the real one. And of course, if you were only thinking about entering short, you wouldn't have even entered here long. Okay, you wouldn't have entered here long because you were thinking of entering short, right? Because the weekly is bearish. So you might have ended up taking one loss, for example. Now, here it goes again, breaks the structure. You would have entered up around here, for example, here. So you enter, let's say, here in the 50 with your stop loss here, and you were going to target, of course, this low. Okay, which eventually, in my opinion, it's going to be tapped because the structure is still bearish. Okay, it's still bearish, it hasn't changed. The most likelihood it's going to go there, right? It might not, we do not know, the market is never 100%, but in the most likelihood it's going to. And there's another 5 risk reward that it's potential to be touched. Okay, even if you are super greedy, you could target these lows, which also are pretty good target. However, these lows are the most likely, and then we'll have probably a retracement. We'll have to see in the 1 hour, because now we're going to explain the 1 hour. Let's go. As you can see here, the day turns bearish, right? But when can we determine when the daily is going to do a retracement to a discount? premium, sorry, because here we are in a huge discount. Then we go to the daily, and where do we have it? We have it here, time frame alignment. We break structure, we have this no real retracement. Then where is our next market structure? Here, no real retracement to a discount. Where's our next? Now we do have our retracement to the discount. We once again take this because we're engine market. Then what do we do again? We take this to this. We go to a discount, and then we're starting to range in a huge range since a couple of days ago. Okay, and look what I said. Okay, look at this. I'm telling you, you have to respect your rules because this will happen. If you know something's likely to happen, just respect your own rules. Okay? Respect your rules and you will have higher win rates. Okay? That's what I meant. We never tapped into the low, and it's not this broker, okay? It's not this broker. You can go to a ton of brokers and you'll see we never tapped into the low. In Oanda, equal lows, okay? Here, low, here, equal lows, as you can see, and here, equal lows. So basically, yeah, we did have a higher low here, but in the rest of the brokers, we had equal lows. We never took the low. Okay, we never took the low because it's likely to not take the low, and it's higher likely to take the high, because that's what I already taught you. If we do not have displacement through a low, we're likely to go to the other candle. So you do not want to be in the market. You want to be outside of the market, let what happens happen, and be done. Okay, be done. You do not want to be involved. Okay, so just look it up. I already explained. The weekly will have its time frame alignment with the daily, and it will go from discount to premium. The daily will have its time frame alignment with the 1 hour, and it will go from discount to premium. Okay, and the 1 hour will have its time frame alignment with the 5 minute, and it will go from discount to premium. That's why if we're at discount and we're not outside of the range, we're very careful with shorting here. We do not short here, we do not say any continuation. We want to be outside. Okay, we took a scalp, we're out because we're in a discount. Once if we break the range, then we can short it out like a maniac until it collapses. Okay, as long as it respects our rules, because that's the most important. So I already told you time frame alignment. Okay, I already told you time frame alignment. It works a ton. It's a very, in the beginning, complicated topic, but if you go to the charts, you put the months or years. I do not know how much time you can put to the market. It depends on you. But if you put the months and years, then you'll end up understanding it. Go to the weekly and daily and see their time frame alignment from discount to premium. Go to the daily and the 1 hour, see their time frame alignment from discount to premium, marking, as I already taught you, your swing high to swing low. And then go to the 1 hour and 5 minute to see their discount to premium in the 1 hour as well. And that is time frame alignment. Nobody will teach you this. I'm doing you a favor because I feel it's my responsibility to help other people as I've been helped by other of my friend traders. Okay, we're a community and we should help each other. Okay, so I'll see you in the next lesson.